The U.S. economy, as one of the largest and most influential in the world, has long been a subject of fascination and concern. As we look toward 2024, the big question is, what challenges lie ahead? While the economy has bounced back from the pandemic and dealt with a series of ups and downs, 2024 presents a unique set of hurdles that could define the next phase of economic growth, or decline. Today, we're going to explore the key challenges the U.S. economy faces in 2024 and what experts predict for the future. First up, inflation. This has been a major concern over the last couple of years, and it's not disappearing anytime soon. In 2022, inflation surged to its highest level in decades, and even though the Federal Reserve has been raising interest rates in an attempt to control it, inflation remains a persistent issue. Prices for everything from food and gas to housing have risen significantly, and while inflation has slowed from its peak, it's still far from ideal. For everyday Americans, rising costs can make it harder to make ends meet, especially for those on fixed incomes or in lower-wage jobs. Experts are closely watching the Fed's actions in 2024. As the central bank continues to increase interest rates, the impact on consumer spending and business investment will become clearer. Higher interest rates make borrowing more expensive, which can slow down economic activity. This could result in a cooling housing market, reduced consumer spending, and potentially a recession. While the Fed aims to bring inflation down to around 2%, it's unclear whether it will be able to do so without triggering a significant economic slowdown. Another challenge on the horizon is the growing national debt. As of 2024, the U.S. national debt has surpassed $30 trillion, a staggering figure that raises concerns about the country's long-term fiscal health. While the U.S. dollar remains the world's reserve currency, and borrowing at relatively low interest rates is still manageable, the increasing debt burden could eventually have serious implications. As interest rates rise, the cost of servicing that debt will also increase, leaving less room for government spending on other priorities, such as infrastructure, healthcare, and education. The question is, how long can the U.S. continue to accumulate debt before it becomes unsustainable? Additionally, the workforce is undergoing a shift. The Great Resignation, a trend where workers left their jobs in large numbers, has led to labor shortages, and many businesses are being forced to adapt to the new normal. Remote work, flexible hours, and changes in work culture have become more important than ever. Speaking of technology, automation and artificial intelligence, AI, are changing the game, but with it comes uncertainty. As we move further into the 2020s, we are likely to see AI play an even more significant role in sectors like manufacturing, healthcare, and even services like customer support. On one hand, this technological revolution has the potential to drive productivity and efficiency, which could boost the economy. Let's not forget the housing market. In 2024, the U.S. housing market is expected to continue facing challenges, driven by high home prices and limited inventory. While the pandemic caused a housing boom, rising mortgage rates are now cooling the market, making it harder for first-time homebuyers to enter the market. Finally, there's the looming challenge of climate change. While it may not seem like an immediate economic crisis, the long-term impact of climate change will certainly affect the U.S. economy. Extreme weather events, such as hurricanes, floods, and wildfires, can damage infrastructure, disrupt agriculture, and lead to higher insurance costs. Thanks for watching. If you found this video insightful, don't forget to like, subscribe, and comment below with your thoughts on the U.S. economy. See you in the next one.